Hi there, welcome to Kneppy Invest and welcome to another answer and reply video. In this series, I answer and reply to your comments. I want to get through all your comments and you are tending to leave me a few more comments than you used to. So I have to get stuck into it straight away. And what I'll do, instead of going back 3 weeks to get to the last comment I want to talk about, I'm going to go back to yesterday because there was an interesting comment from Matt Hobden at 4063 who said or stated, the other day you said you sold Droneshield on open. Today you're telling us you never ever sell shares on open. I'm confused. So let me clarify your confusion. I actually did write a comment and Matt Cobden replied saying thanks for the clarification. So you can actually look at my reply to that. But I just wanted to further clarify what I mean in this sort of situation, because there is a difference. Now, when I say I never ever sell shares on open, it's also never ever buy shares on open. It only refers to those situations when a company releases a price sensitive announcement. So we're talking about financial results, profit upgrade, or maybe a negative announcement. I want to just wait a little bit just to see how the market reacts, because what I think might happen could be the complete opposite to how the market reacts. A perfect example of that was Live 360. I thought the results were a little bit weaker than I expect. Well, they were weaker than I expected, and I thought the share price might go down. The share price rallied, went up 18%. So I was wrong in that instance. But I also should mention that on occasion, and this is fairly rarely, I will buy or sell shares on open when a company releases a price sensitive announcement. Usually it's to a plan. And a perfect example of when I've planned to sell or buy shares on price sensitive announcements is a company called Atlas Pearls. So I bought shares in this company last September at 5.7 cents. And this is because there was a lot of excitement in the pearl industry at this point in time. Of course, this company sells. They produce and sell pearls, and there's a lot of excitement in the pearl market. I knew that. And at some point towards the end of 2023, I came up with a plan to sell my shares in Atlas Pearls when the company releases their results in February, because I thought the results were going to be quite good and there was potential the share price could rally. And then after that, I thought the pearl market was quite unclear. The pearl futures, or whatever you want to call it, were quite unclear. I wasn't sure what was going to happen in the pearl market. So I just thought I'll sell my shares on open when they release their results. So I sold at 20.5 cents. And that was actually the high of the day, or near the high of the day. And that was near the peak of the day as well. I just wished the results were pretty good. I just wish the share price opened at about 22, 23 cents. And since then, the share price has dropped from 20.5 cents down to 9.5 cents. So my plan has gone well when it came to Atlas Pearls, but I consider this company a commodity stock because they are selling a commodity. Now, on occasion, I don't have a plan and I still will buy or sell shares on open when a company releases a price sensitive announcement. But typically, that happens for small companies. And a perfect example of this is SKS Technologies not that long ago. In fact, it would have been the start of July the 8th. I bought some shares in this company at $1.04. Now, they released an announcement on this day. I forget exactly what. It was a positive announcement. 8th of July, SKS Technologies. Let's have a look. Oh, an SKS market update, financial year 24 revenue upgrade. So this was an upgrade. I love upgrades. And I had a look just before the share price opened, and the indicated price was only up 4%. I went, ooh, let's buy some shares on open, because I don't think the market actually realized how significant this particular announcement was from SKS Technologies. And I was surprised the share price was only going to open up 4%. So I took advantage of the lack of market interest on this announcement. And this worked out fairly well for me. Share price opened at $1.04 and went up to a high of $1.12. Not a high, that closed at $1.12, went to a high of about $1.20. And a few days later, the company released another positive price sensitive announcement on the 12th of July, a $90 million data center award, and also a market update. And the share price went up again. Yeah, so that I think I bought on open well on that day, and the main reason I did that was because the market was missing the story here, and was a pretty significant, important story. If this was a better, more well-known company, that wouldn't have happened. The share price probably would have opened a little bit higher. So, if, on a rare occasion, I will buy or sell on open, particularly if I do have a plan. But usually, I just want to wait. When a company doesn't release or hasn't released a price-sensitive announcement, I will buy and sell any time of the trading day. On open, on close, during the day, I don't have any rules. And that's what happened with Droneshield. I sold some shares on Droneshield. I don't think it was on open. I think it was a previous day near the close. And it was just by happen chance that the share price dropped a lot the next day. It was not, it was just luck. I'm going to put it to you straight. It was just luck. The share price fell significantly the next day, which comes to, and thank you for that question, Matt Cobden, which comes to the next question I want to talk about from Bet Hutchinson, talking about that big drop in share price in Droneshield. Got to admit, you seem to have a sixth sense when it comes to market moods. You talk about Droneshield getting toppish. Next day, it drops 20% amid short seller reports and spurious trading halts. I still think that was just luck. It did look toppish. And the reasons I thought it looked toppish is just because the share price just was going vertically up. And whenever I see the share price going vertically up like Droneshield, so what I'll do is I'll just go to that day when I sold. There it is. It just looked really toppish. It's just pattern recognition. It looked toppish. It opened, there was a bit of a gap on open that day. Share price was rallying. There was a little bit too much excitement in the market for me. And I decided to take profits. I did not completely sell out because I hadn't the conviction that that was going to be the top. And in fact, the next day, the share price opened higher. That was actually another bad sign. In consecutive days, the share price gapped up, and then the share price dropped 20% that day, and the share price has kept on falling. So at this point in time, I have no intentions of getting back into Droneshield. That was more of a trade, and I don't see any reason this point in time to get back in. Longer term, no idea. Longer term, Droneshield could be a significant, great investment over the next 5 to 10 years. I just don't know. There's a lot of uncertainty about this company, particularly when it comes to margins. This is a pretty high capital, is that the right way to say it? This is a capital intensive company. And I do think their margins, definitely an argument that the margins will probably drop, particularly the times we are seeing right now. Favorable for this company right now, but those favorable times more than likely will not be so favorable over the next 5 to 10 years. So definitely think there's an argument that even now, the share price just above $1, the company might be overvalued, but they have a lot of cash on their books. So they could utilize that cash effectively to grow this company in the future. But that's the question. Can they use the cash on hand effectively? Capital allocation is very important. Okay, so let's go back to the next question. Thank you, Ben Hutchison. Probably another question about Droneshield. Yep, Method 341. Talked about Droneshield. Why? And it just shows you, this was 3 weeks ago, how times change fairly quickly. Because Method's just mentioned here, Trump's high chance of ascendancy after nearly having his CRED in. Things have changed. Kamala Harris is now the favorite over Trump. Things have changed. If Biden was still in, I think Trump would be a no-brainer. Now I don't know. So last time I looked, yesterday, Kamala Harris was favorite over Trump. Whether Trump, if he was in presidency, would be beneficial, or what's the opposite of beneficial? Detrimental to Droneshield, I have no idea, because we are still in. There's still a lot of tensions around the world. Not only Ukraine, Russia, Middle East, there's tensions, and who knows what's going to happen with China, Taiwan. Just don't know. The tensions around the world could remain elevated for a while yet, and that you would think, should benefit Droneshield. So thank you, Method 341. In 10 years, this could be worth $0 or $20. The upside is clearly higher than the downside. I agree with that. This share price of Droneshield could be anything from $0 to $20, $50. Don't know. But at this point in time, I'm just going to stay up because the chart looks pretty negative. Now, in saying that, could it have reached the bottom? Don't know. Share price has fallen a fair bit. So there's going to be a lot of resistance moving forward. A lot of people have bought at higher prices. and that those shareholders will be resistance. As soon as the share price goes on a rally, you will see those trying to get out because they consider this company as dog stock now. If you bought shares in this company at $2.20 on the 12th of July, you think this company is a dog stock. That's the mentality of many investors. Okay, so Jason Whiteley mentions Sol Gold and DGR. I haven't actually had a look at DGR, how the share price is going. So DGR has an investment with Sol Gold, and they released an announcement. 16th of July, Sol Gold announces $750 million development financing. That was beneficial for DGR. I have not had a look at the chart lately for this company. Let's see which way it's going. Down. So this is the reason why a lot of times I will just wait. So DGR rose 233% on the back of this announcement, went to a high of almost 4 cents. Share price now is 1.8 cents, and the share price has dipped a fair bit. Volume has decreased. Probably the reason why I am not really, or have not been following this company, is the share price keeps on dropping. It's in my high volume spec. I just want to continue monitoring what happens after a significant price sensitive, or not price sensitive, a significant move in the share price on the back of this type of announcement. So just for future research, that sort of thing, why I'm tracking these companies' share prices. So thank you, Jason Whiteley. Actually, what did you mention here? With Sol Gold, it will be pounds making investment more like 40 million Australian. Sol Gold is likely to be worth more, except management did a very bad royalties deal to keep the jobs. Unfortunately, DGR Global has been a long time spinning out a lot of interesting companies, but I mistakenly have not been following it closely. Thank you. Yeah, I'm not that interested in DGR Global. Jasonnimmo, thanks again for joining the streams. You're welcome. Clumeroo, acknowledging bad decisions. I sold Droneshield a couple of years ago. Titomic and AL3, which is AML3D or something like that. Or is AL3... No, AL3 is AML3D, yeah. And I was just too early. Probably my biggest fault in the past, say, 10 years is I have been too early to trends. Sometimes way too early to trends. Lithium, I was way too early to the lithium trend. Thematic, way too early to the uranium thematic. And that has come up time and time again. And because I'm way too early, sometimes I get bored and sell out a little bit too early as well. And then I miss the when the trend changes. So that's one thing I have got to learn, is possibly be a little bit more patient when I see a future trend, because sometimes I'm just way too early. So maybe acknowledging that, maybe acknowledging your own faults, your own weaknesses is important as well. Daniel, at loss with drone, ATM, we'll be waiting for it to slowly rise. Unfortunately, that's not happening just yet. So quite a few questions about Droneshield. Is JB Hi-Fi a sell? This is the video I did. I can see an inverted head and shoulders pattern on the daily chart. My predictive TA has it headed to 80 before retracing to 45. Interesting. It has hidden bullish on RSI and regular bullish divergence on OBV. Again, nice review. So 80, that would be significant. I don't know how it's going to get to 80 in the short period. So what did you say? There was an inverted head and shoulders. Okay, I can sort of see that, yeah. So that's the left shoulder, right shoulder. That's the middle. So I can see a double or triple top, and it's broken above that. In fact, this chart looks okay. This chart looks pretty good. My only issue with JB Hi-Fi is valuation. So that's probably my only issue, but who knows? Maybe the market can remain irrational for a long while. In fact, it's not that far off 80. For some reason, I thought it was closer to 45 than 80. Just shows you how stupid I am sometimes. Before retracing to 45. So I have taken profits with JB Hi-Fi, and I'm waiting for it to fall. I just think it's overvalued at these prices, but I could be absolutely wrong. And a lot of times when I have sold out of a company or a position, when I do think the company is overvalued, it has been a mistake. So sometimes I just don't learn from my mistakes. So thank you, Jasonnimmo. Nimmo. Step one is back, says Liam Jones. Yeah, share price of Step one actually rallied the other day, didn't it? Step one clothing, this 17th of July. and funnily enough, it hasn't really rallied since then. So this was a potential breakout. I was actually following step one after that, and there's been no reason for me to add to my position. So I do have a position in step one. I sold out of a trading position, but I have a longer term position. So when the share price fell below $1.60, that's when I took profits somewhere in there, I think it was. And now the share price is at the same level, $1.62. At this point in time, I haven't been thinking about taking another trading position in step one. This was a potential breakout, and I was thinking, oh, if it starts looking pretty good in the next few days, I might take a position, but it hasn't really done that at this point in time. And another reason why the valuation for me is not compelling. If the valuation, like the PE ratio of this company, was really low, I would be compelled to take a trading position in step one. But I do think it's probably fair value at current prices. And that's just my opinion. Step one is back. Didn't really go away, to be honest. XRF hitting new highs on solid volume after a recent announcement. Great looking chart. Let's have a look at XRF. It's probably come down a little bit. XRF, would I be negative on this at all? And the answer to that is no. Yeah, it did fall a fair bit on the Monday, which is understandable, 9%. And yeah, but that 9% didn't do anything in regards to the chart. It still looks pretty good. It was a possible buy the dip situation for XRF. And this is another company where I'm looking forward, or really looking forward to their results. And the results should be pretty good, in my opinion. Pretty sure, did they release something? What did they release in the last 3 months? Nothing. What's the most recent interesting? The March quarterly trading report on the 16th of April. So that was almost 4 months ago. Since then, nothing. So quiet. But still, the share price is moving up. Keen on Curvebeam. Think 200 to 500 market cap reasonable next few years. I have mentioned Curvebeam on a few videos. I had a closer look at Curvebeam because someone just mentioned maybe it's the next Pro Medicus. I don't think they said maybe. They just said definitively this is the next Pro Medicus. I wouldn't go that far yet, but it does have promise. Does have promise, just their tech, that sort of thing. Not quite profitable or operating cash flow positive. So let's just have a look at the most recent Appendix 4C. Where is it? Here it is, 31st of July. So not quite at that inflection point. So if you do have confidence in their technology, their management, maybe now is a good time to buy. They just did a capital raising, if I remember correctly. Yep, just did a capital raising. Share price pulled back on the capital raising and has taken off. And let's just have a look at a quick Appendix 4C. So cash receipts up to $2 million, $7 million for the 12 months, and still burning through a fair bit of cash. And you can just see the share price pull back on the capital raising on the 5th of August. And also, that's the big down day, down 23%. And then the next day, the share price rallied 19.4%. So yeah, that was I wish I was strong enough, brave enough to buy some Curvebeam shares at 18 cents. Although that's all in hindsight. Now, if you look at the whole chart here, nothing to get overly excited about just yet. I wouldn't say the share price is in an uptrend. In fact, I'd say it's in a downtrend. Okay, so that's Curvebeam. The technology looks really interesting. So the question becomes, can they prove their model? Can they prove their potential? I'm not there just yet. I'm not sure if it was intentional or you just didn't see after seeing 18 up and 2 down. Context is important. I have no idea. Thank you, Jasonnimmo. 9 slide glide. Regarding today's unusual performance of the emerging companies index, I think you'll find that small resource companies constitute a large portion of the companies in this index. And since the smaller resource companies were quite weak, today the XEC was also weak. I've now heard that from a few people, saying that there is quite a few of these smaller resource companies in the emerging companies index. Yeah, so I have noticed the XEC is an underperformer usually. It does weird things when it comes to daily performance. Okay, Zip 4103, page 7 of quarterly report shows they have debt repayments date coming soon. 80.2 million, 11 million, 663 million. It's approximately 700 million due in 2024. How can they repay with raising only 200 million? Yes, I think PeterCao has mentioned this. The $700 million is different from the $200 million corporate loan. The former is to lend to users, yep, and can be refinanced based on a larger amount of receivables, but the later date is a real debt and has to be filled. That's why the strong supportive capital raising is really good news for Zip, as it places Zip in a much better position to realize profits. One important thing you have to do with Zip is just don't look at the debt. Also have a look at their receivables there, because they're sort of like a lender. So they have to lend money. This is not absolute for banks, but for a lot of banks to lend money, they need to borrow money. So you have to look at the borrowings and also have a look at their loans. They are loaning out. The whole reason they borrow money is to loan money out. So if you have a look, I'm not sure if it's in their pennies 4C. Let's have a look at their pennies 4C. They probably will have, like, I do have a look at section 7, which is loans. So they have $2.4 billion of loans, but here it is. So yeah, so I have all these loans, but it's different. So all these loans are backed by the money they give their customers who are buying stuff. So that's the way you have to look at it, and I think PeterCao said it perfectly. So I let him say it. Yes. Hi, Kneppy. Great video. Particularly fascinated by the Titomic story. I have owned it since 2021. It's been a hell of a ride. I have watched it crash and burn. Can't believe it's now up nearly 80%. Congratulations. Bought it originally because it had a great idea, story. It was also based in nearby Melbourne. Since they have pushed hard to develop internationally, it seems to have gained a lot of strength. Simply one of my buy and hold successes. Let's hope it keeps on going. So Titomic is one of those companies I do like the story. But again, the question becomes, can they realize their potential? Because a lot of stories don't play out. There's no ending. But the chart looks really good. So there was a nice little dip, and then the last few days, the share price has taken off. Share price dropped to 12.5 cents. Now it's up to 17.5 cents. I am trading this right now. This is one of my trading of story stocks that have maintained a position just because I do like that story. And the share price has gone up a lot. So 2021, yeah, it has been a bit of a rally. Share price all over the place. Massive downtrend. And the trend has really, and the sentiment has really changed. The company did release their pennies 4C, and not much of a negative reaction from the market. So not operating cash flow positive, that sort of thing. So receipts 1.4 million, operating cash flow negative 2.7 million. So nowhere near that inflection point just yet. So this is sort of the company where you need to really like the technology and the management and think the story is there. And the story can be turned into a real business, a real company. A real business, real company is one that makes money. That's the whole point. We have businesses to make money. And yeah, so Titomic. So thank you, Joebloggs, and I hope Titomic works really well for you moving forward. I think the valuation of Titomic is up there now. It's probably 200 million, 164 million, yeah. Okay, let's move on to the next one. Get through these pretty quickly. Dredge and Z1. Droneshield bought this stock at 34.5 cents, sold it last week at $2.15. Couldn't hang on to it any longer. It was getting too volatile, and I had way too much in it. I did buy Smart Parking last week based on good financial growth outlook. It's up 26% since looking strong. Yeah, I actually can't blame anyone from getting out of a company because it's too volatile. I actually don't like volatility. I just don't like when share prices rise like this or rally like this. I like slow rises. Particularly, I like rises in share price when the rest of investors don't care about the company. That means there's strength in the rise. This was just too much hype, too much FOMO, and to be honest with you, not surprising the share price has collapsed like this. We have seen this play over time and time again. People get just interested in the company like this because the share price is rising, and that's it. Smart Parking, on the other hand, has just been going higher. What Smart Parking? SPZ? S&P's Smart Pay or something. Smart Parking. This is sort of a chart I like. It's just a steady rise, steady rise. You don't see much chatter about this company. Yeah, so this is a beautiful looking chart. This goes back to 2022. Our share price has risen from 20 cents to 60 cents. It's been a three bagger over the past almost 2 years. And that's a sort of chart I like. So congratulations to Dredge. And I have never been in smart parking for some reason. I don't know why. Vinny Healy, 8861. When you say you're trading a company, do you mean if you are day trading it? No. Or buying up in the uptrend and holding until it starts to trend? Yes. I have tried day trading. It's not for me because you have to monitor all the time. You have to be probably at your computer during trading. I don't like that. So what I try to do is I try to find a catalyst, or if not a catalyst, when I mean by catalyst, I'm talking about a positive, price-sensitive announcement, financial statements, profit upgrade, and then I'm waiting for a breakout, preferably. And then if it's breaking out, more likely it's an uptrend, change in sentiment, that sort of thing. So I try to buy a company that is moving into an uptrend or already is an uptrend, breaking out, positive financial news, and I try to hold it as long as possible. Now, typically when a company releases a profit upgrade, you can see the benefits for another 6 months. So I would say my ideal holding position would be multiple years, but for the average company, I'd say 6 to 9 months, because after 6 to 9 months, and this is my own research, you lose the positive effects of a profit upgrade or good financial news, because the company needs to release more positive financial news after 6 to 9 months. So probably my average holding period would be 6 to 9 months, but preferably a few years. That's my ideal. A few years, 5 years, 10 years. Because if I'm holding a position for 10 years, that means the share price has been in uptrend for 10 years. Okay. Robert Thal, Tommy Lee predicted a strong move in RUT in 2024. His target is 3,000. RUT? Is that the Russell 2000? Russell 2000 and target 3,000. Who is Tommy Lee? When you say Tommy Lee, I just think of the is it Motley Fool? Not Motley Fool. Motley Crue. Tommy Lee, yeah. Motley Crue. When you say Tommy Lee, that's all I think about. Is there another Tommy Lee, or is this who you're talking about? Is Tommy Lee the musician for Motley Crue, who was married to Pamela Anderson, wasn't he? For how long was he married to Pamela Anderson? For 3 years. Was also married to Heather Locklear. Well, there you go. Is that the Tommy Lee you're talking about? Anyway, could I see that happening? Who knows? If you look at the Russell 2000, oh, geez, fallen a fair bit. Looked like it was breaking out. Now it's pulled all the way back to just above 2,000. So if it does get to 3,000, that's a nice 50% rally in the small caps in the United States. That has to happen in the next 4 months, according to this. Forest Hill, thanks for this, Kneppy. I was one of those who requested this, so I appreciate the great analysis. That's JB High, a sell. You're welcome, Forest Hill. Thomas 151 ABC. A lot of names I've never heard of before. So these are maybe first-time commenters. Hi, Kneppy. Just wondering, could you list all the shows, podcasts, net outlooks that you read regularly for the stock market? Okay, I did a podcast. List all the podcasts I listened to the other day. All the shows. I don't really. I only listen to podcasts. I don't watch shows. And news outlets. I don't really look at any news outlets. I just Google it if I want to read something. I do get a lot of emails, by the way, and I do read those on occasion. What emails? And they're just coming. I forget what emails I read, but a lot of emails I do read. But a lot of them I just delete straight away, like from Market Index. So I get an email from Market Index every day, from Earnings Whisper every day. Actually, in fact, few emails from those sites every single day. Those are the main ones, but just mainly podcasts when it comes to financial stuff. Yeah, no shows, no news outlets. Martin Pleasant, great video as always. Thank you. Sayona is on the verge of making great gains. Bring on the pump. Let's have a look at Sayona. Would I be in Sayona right now? No. Share price keeps on dropping. You have these little rallies, and those rallies always fade out, or have always been fading out. And again, Sayona, which is lithium, it's all based off the lithium price. If you think lithium will rise or rally, yeah, maybe, but the share price of Sayona just keeps on dropping. So for me, not yet for Sayona. Sasha Tumik, great video, thanks. Would be interested in your thoughts on Bellevue following its recent announcement. Share price keeps falling for no obvious reason. Let's have a look at Bellevue Gold. So this one at BGL, they did a capital raising, I believe, recently, and the share price has taken even a bigger tumble. So it's on the 26th of July, and this comment was 3 weeks ago. So that could have been like 3 weeks ago. And in fact, the share price is at a very important level. The lows we saw back in February, that's where the share price is right now. Now, overall, if you look on the longer term, the share price has or is in an uptrend. And if you look at the times when Bellevue Gold has been the weakest, so we're talking about March 2020, July and October 2022, and right now, the share price falls briefly below the 200-week moving average. So very rarely does it fall below that average. And that's the time to take position in this company. And it fell or hit the 200-week moving average during last week and has rallied off that. So that in itself is interesting. So maybe now is a good time to take a position in Bellevue Gold if you like this company and if you're bullish on gold. Am I bullish on gold? Well, I suppose over time I am, but I have no idea. And so let's have a look at the gold chart. So a bit of a discrepancy between Bellevue Gold and the gold chart here. So gold, I don't see any significant weakness in gold right now. Could it keep on rallying from here? Yeah, definitely could. In fact, the gold chart looks okay. So the only reason the share price fell was the capital raising, I believe. Let's have a look at the capital raising, by the way. I'm assuming the capital raising was done at about, I probably don't remember. I probably knew it at the time, but my memory is shot. So I'm assuming the capital raising would have been done at about $1.40. Let's have a look at the capital raising for Bellevue Gold, which they did on the 25th of July. So let's have a look. We'll open up the successful completion of the $150 million placement at $1.83. No, $1.55. $1.55. So the share price is well below the capital raising price. That's surprising. I do like this chart. Just be where the share price is in relation to support and long-term support as well. So this is an interesting looking chart for Bellevue. More interested now, to be honest with you. I'm going to put this into my watch list. There we go. Just means I'm a little bit more interested. Thank you for that question on Bellevue. Hadn't actually had a look at Bellevue for a while. Hutcho, love your work, Kneppy. Out of Pointerra today and back into Playside. Fingers crossed, I'm sure I regret it. Ooh, do you regret it? But I take my 20% profit on a highly speculative company. I really hope Pointerra do well. Okay, so Pointerra and Playside. Pointerra has gone on a bit of a run lately. And the question is, when did you sell? So you still could have made profit out of Pointerra, and possibly share price has pulled back from when you sold. Because if you sold on the 18th, you could have sold around about 7 cents, 6.5 to 7 cents. The share price now is 6.5 cents. The chart for Pointerra does look interesting. I think sentiment is starting to shift. So I'm a little bit more interested in this chart at this point in time. I still have a small position. The question I have is, will I add to my position in Pointerra? I'm not quite there just yet. Playside, share price though has kept on falling. I don't know why. Share price kept on falling. This is a case where maybe I should or we should be looking at the chart or trusting the market here, because the share price has moved into a downtrend. even though the last time the company released something was positive. The 28th of May, the company released something really positive. I thought it was pretty good. Playside Studios. But for some reason, the market doesn't like this company right now. So the last sensitive announcement the company released was a meta contract extension expansion. Nothing negative there. And on the 28th of May, upgrade to financial year 24 guidance. This was an upgrade, and yet the share price has significantly fallen since then, which is weird. So something negative is happening. Maybe it's just the fund manager getting out. I don't know. But the chart looks or screams sell to me, and I am a shareholder, but I just don't know. It's the company is giving out positive announcements, share price is in a decrease. So this could be a case where the market is skeptical, and maybe the market's going to be right, and we should have been trusting the chart. I don't know yet. I don't know. Still a shareholder, by the way. David Race, when times are tough, folks gamble more, play lotto more, drink more. Sad, but true. Yes, well, me not so true. I don't gamble, I don't drink, and I don't play lotto. When I say I don't drink, I'm not a teetotaler. I, on occasion, do have a drink, but when I say on occasion, well, the last drink I had was maybe a month ago, 2 months ago. I don't drink. I just don't need alcohol. I just don't like the taste of alcohol. When I say I don't like the taste of alcohol, the only thing I do like is shots of the harder liquor, just because it just gives this warm vibe. Like, I don't like beer. I really dislike beer. Maybe I'm weird, but people tell me it's an acquired taste. I don't like drinks that are an acquired taste. I hate coffee, acquired taste. I hate beer, an acquired taste. Just for some reason, I don't like it. Both are very bitter to me, which is interesting because children tend to not like bitter stuff. And as you get older, apparently your bitter taste buds become less sensitive or something. And that's why adults don't mind beer, don't mind a coffee. But for me, maybe my bitter taste buds haven't weakened or something. I don't know. NRX is getting interesting, according to Daisuke. What's NRX? It's not Noronex. So I don't know anything about this company. I'm going to say that market cap is 6 million according to this chart. So it's going sideways. Consolidate. Some spikes in volume. A couple of spikes in volume. That could be a good sign. I don't know anything about this company. So let's have a sneaky look at Noronex. My first ever look at this company. Let's have a look at their quarterly activities report. Does this company have any receipts? That's the first thing I want to look at. They also released a presentation on the 2nd of August. So Diggers Conference. So this has something to do with mining. It says materials. So Appendix 5B, so not the Appendix 4C, yes, so it's a mining company. So it's an exploring company. This is probably why I don't know anything about the company. I don't know many companies. Secures transformational earn-in agreement and strategic alliance with South 32. Well, that's interesting in itself. Something about copper belt. So this could be a copper explorer. Something about uranium. This could be a copper uranium explorer. They talk about north of Bannerman Energy World Class, so they're in the right area, possibly. I'd say, so what I do when a company releases their Appendix 5B, I go straight to this page, no receipts, move on to the next one. So, and then the About section. Listed copper company with advanced projects in Kalahari Copperbelt, Namibia, and Ontario, Canada. So they also mentioned something near Bannerman. Okay, so yeah. So for this type of company, I would leave on the watch list, and that's it. But share price is consolidating, which means maybe the bottom has been reached. So again, this comes to your personal preferences. Noronex. For me, no, but for you, yeah, maybe. I don't know anything about the company. It's the first time I've had a look. Buddha Hut. RE, the tech downturn. ASML downgrading its earnings projections was one factor. ASML3. No, ASML. What's that one called? Just ASML. This is just a typical chart in the United States, up and down like a yo-yo. You just have it's one of the reasons I really hate company or really hate the American markets. It's just so fickle. ASML, just have a look at the video. It's just, I mean, I'd love to be a day trader over there because it's up and down 10% in days. Every day, it seems like, up. Oh, it was down slightly today. Today it was only down slightly. But the other day it was down 5%. Before that it was up 6%, down 6%, up 7%, down 10%, up 10%. And yeah, it's just a common theme I find over there. Share price could go up or down 20% in one day. Let's have a look at a few companies in my portfolio. No, not that one. What's a good example here? Shopify, I think I mentioned Shopify the other day. This is a great example. Just look at that chart. Hey, it's just weird. It's one quarter results, a little bit better than expected. Share price up 20%. Next quarter, the numbers a little bit weaker than expected, down 20%. And when I say weaker or stronger, it might be weaker or stronger by 0.0001%, but that's enough to trigger the pod shops over there. Anyway, so thank you for that. I don't know anything about ASML. I'm assuming they have something to do with semiconductors or chips or something like that. Cass Flish, the ATO will always catch up with you. Worrying about tax is not a good mindset for making money. Capital gains and losses can be carried for future gains and losses. Also found out holidays can be tax deductions if there was a free training course nearby. That's interesting. Yes, I actually do agree with this, that I will never take tax considerations when I'm buying or selling unless, there is a one unless I am around about holding a company for 330 days. And I went, this was a good example the other day with a company called, or the other week, or the other month, with a company called, it's been taken over now. What was it called? It went up 100%. And I completely forget what that company is called. And I had a look at how long I've been holding the company for, and it was like 330 days. I went, well, the company's been taken over. The share price is not going to move much from here. So I just hold it for another 30 days, 365 days. And yeah, my tax actually will be less on that particular company. But I won't make decisions when it comes to buying and holding based off tax. Now, I could understand if you've been holding a company for 20 or 30 years and the company share price is up 7,000%. I can understand that sort of scenario. And the other thing I should mention is I'm not a tax expert. I'm not an accountant, that sort of thing. But I will not make decisions completely based off tax reasons. But that's interesting about the holidays tax deductions. I want to go to America to do a lot of hiking in the Western United States and Canada. And maybe I can find some free training courses over there. Get it tax deducted. Ruben, I'm sure once they have settled a VCAT, the BOD will start preparing legal action against ABC. So I'm assuming that's board of directors. Is that lifestyle communities? Yes. That will boost at least $200 million worth of cash from defamation lawsuit. Yeah, and then you said lifestyle communities. Yes. That's a possibility. I'm going to have a look at the chart for lifestyle. So it's just based off a negative ABC story. Share price just collapsed and the share price keeps on falling. That's really negative. Is there value in, but this is the sort of company I would not even think about taking a position in. But if I do see value, I could see myself taking a position in this company. So is there any value in this company yet? What I might do, this is a very quick analysis of the company. So just go back to the last 2 years. They've made profit of between $80 and $90 million. In fact, the last 3 years that's happened. If you go back to 2019, profit of $55 million. Nice growth in revenue. So if we just assume, $80 to $90 million of profit, could be like a normal year for this company. And if we assume no growth, that means the PE ratio of this company is like 12 right now. In fact, it says the PE ratio is 12.26. So obviously the market is expecting profits to significantly fall in this financial year. If we look at the semi-annual numbers, profit was down to $21 million for the last half year. So profit more than likely will be significantly lower in this financial year. And just negative vibes, negative sentiment has driven the share price down. But the chart looks pretty weak and no end in sight to the share price moving down for lifestyle communities. Thank you, Ruben. PeterCao, if you have a look at their half-year report, any interest cost associated with transaction costs has been calculated to is included to calculate EBITDA. Oh, it's EBTDA. So maybe I got that wrong. Maybe I was thinking it was EBITDA. So if that's true, that's EBITDA without the I is fairly important. That is, if EBITDA without the I is 20 million and the interest cost is 100 million, the actual EBITDA is incredibly 120 million. Yeah, that makes sense. Of course, they can report an EBITDA of 120 million as other companies do, but people are really looking at EBITDA, which is a much better measure for profitability for such a business. And I would agree with that. So I don't know if I got this wrong, but let me have a look. Where do they mention EBITDA? Let's have a look. See, 17th of July. Do you want to see where we get some numbers from? Or maybe the pennies 4C. Let's have a look at their pennies 4C. Do they mention EBITDA in this? No, there's nothing. Okay. Activities report, 17th of July. Let's have a look. They do, they do mention EBITDA, but without the I. Exactly. I might have got that wrong. So that actually is more significant. Cash EBITDA 22 to 25. Cash EBITDA 67 to 70 million. Does not include the interest. That's actually quite important. So I got that a little bit wrong, I think. So I just assumed that was EBITDA with the I. I don't know. Can't remember. So thank you for that clarification, PeterCao. Thank you. Thanks, Kneppy. Great videos, interesting about MYG. Curious to see what's happened when they released the annual report. You mentioned a while back about AHL, where the bad news turned and you weren't in a rush to sell. In an example like that, how do you think about if to sell? Doesn't have to be specific to AHL, of course, but interested in your processes and thinking on it when there's a negative trading update. Okay, so for MYG, I'm interested in their half year because I think that could be a pretty good. In fact, I think their yearly results might be better than I expected. And the chart looks okay. Share price is a little bit higher than when I bought. And the share price, we started to see a little bit of increase in liquidity too. So I'm excited about that. I'm really interested to see their half or their full year report. With Adrad, this one is interesting. So I did buy at 72 cents. Now the share price is 67 cents. I actually did put a sell bid at 75 cents. And I'm pretty sure it's still in the system. So I will sell these shares in this company if they get to 75 cents. But I just don't think this company is that. I think there's an argument, even though they did release a negative trading update, I don't think this company is that richly valued. So a lot of the price is already, or the lot of the where the price is now, like the valuation of the company, market cap is 54 million. Price earnings ratio is 7.9. So a lot of the negativity is already priced into the company's share price. So I don't think there's much downside to Adrad. Now, I could be wrong, but I don't think there's much downside to Adrad's share price at 67 cents. So I think there's more upside than downside probability. So I'm not willing to sell at these prices just yet for Adrad. So that's the way I look at it. If I see a lot of potential downside, I will sell. But sometimes with companies like this, I don't see much downside. This is not a well-known company. More than likely, those who want to have sold out. And the negative trading update was on the 31st of May. Was that the day? Share price on that day dropped 11.8%. And ideally, that's the day I should have sold. So about 80 cents. I could have sold that day, but I don't want to sell on that day. That's one of my rules, unless I'm really, really confident. So a lot of times it's just vibe and feeling and just valuation. And I think this company, I mean, all they need to do is release one good financial statement, one good, maybe a profit upgrade, and the share price will go on its head. So I think it just comes back to valuation. Do you see, or do you think the company is undervalued or overvalued at current prices? Now, for a story stock, it becomes really hard, really difficult. But though most story stocks don't really profit up downgrades because they have no profit or no revenue or anything. So anyway, hopefully that answered your question. Now, I think it's individual. It all comes back to the individual company when it comes to a negative trading update. Typically, I probably would sell. That's ideally. So you buy into positive trading updates, sell into negative trading updates, but it's by case-by-case scenario. And for Adrad, I just don't see any reason to sell because I don't think it's overvalued at all. It's probably more undervalued than anything. Dixie again, I like AMA so much so 2.5 thousand at 4.2 cents. Beaten down by COVID lockdowns. They do a lot in Victorians. We're not allowed to leave home or more than 5 kilometers from home for 2 years. Plays havoc on the car repair market because no one is driving. For this company, it's all about the chart for me. It's definitely a low quality company, and the chart still not there for me just yet. And they still had a lot of debt last time I looked. They did a cap raising, maybe to decrease that debt, but the chart says no at this point in time. But if you're willing to take the risk, yeah, why not? So you're up. Share price now is 4.5. So you're up a little bit. But again, just because it may not be for me doesn't mean it cannot be for you. We're all different. Marianne Delonia, great video and content. Thanks, Kneppy. You're welcome. Okay. Please consider including Crowdstrike. Oh, I've already answered that, haven't I? Yeah. So I have been looking at Crowdstrike. By the way, I have taken a position in Crowdstrike. I have taken a position in Crowdstrike, a small position because I don't know. Because I do think, nice little rally, by the way. This is a really good one-day candlestick on the Monday, the 5th of August. Share price went up about 10% on that day, yeah. On that particular day, oh no, it didn't. From the low to the close, it went up 10%. But that was peak bottom in the American market. It was on the Monday trading session. The share price has rallied since then. So this is a possible scenario where the market is getting a little bit too much. There's too much negativity in Crowdstrike. And to be honest with you, if I had a choice between Crowdstrike or the competitors, I would pick Crowdstrike right now because they've made a mistake. And do you think they're going to make any more mistakes in the next 5 years? Most likely not. It's sort of like after COVID, after 9/11, the best time to travel, the safest time to fly was after 9/11. I had people who wanted to visit me. So, oh, no, I'm too scared. Safest time to fly was after 9/11. The security was insane. Safest time to fly, safest time to buy companies or to buy their products is when they have some sort of issue, like Optus or who was it, Medibank. They had some hacks. That's after that. After a company is hacked, that's the safest time to become a customer of these companies because it's not going to happen again to them. And I just don't understand why people would leave, go from Optus to Telecom or Telstra just because they had a hack. Well, what do you think is going to happen in the future? Telstra is more likely to be hacked than Optus because it's already happened to Optus, and you can bet your bottom dollar that they're going to make sure it doesn't happen to them again. So I believe Crowdstrike minimum. I think maximum pessimism in the company right now. Now there is still a lot of uncertainty in terms of legal action, but I think even those possible legalities against this company are probably overstated right now. And definitely, this is the leader in this sector by far. Yeah. Method says, love the timestamps. Thanks for putting the effort in. You're welcome. That was liked by quite a few people. I think you should create a curate community on a platform like Patreon. That way people can pay what they can afford for your knowledge. What do you think? Should I have or create a community on Patreon? I have thought about it, but I just don't know. So if I do get a lot of feedback from you about a community like Patreon, maybe even just simple things like Facebook, I don't know. So leave your thoughts. Do you or would you like to see me on Patreon? I don't even know how Patreon exactly works, but like, is there tiered paying systems or whatever? I don't know. And what extra do I have to do? I have no idea. So, but if I do get a lot of feedback in regards to Patreon, I will have a closer look at it. Astronomic, if you could only make or take one and not choosing one is an option, where would you put your money in? Or, okay, if you could only take one and not choosing one is an option, where would you put your money? HVST or CRED? What the hell are these? HVST. Aussie Dividend Harvester. Ew. I'm going to have a look at the chart for these, by the way. When I don't know something, I'm just going to have a look at the chart. Dividend Harvester. Let's have a look at the weekly chart. I think the weekly, oh, geez, that looks ugly. But, so your capital's going down. Your capital's halved in 10 years. But if you adjust it for dividends, it looks okay. So I have no interest in these sort of assets. I don't know what you call them. And I'm assuming the second one is CRED. What's CRED? CRED. Beta, CRED. Is this the same sort of thing? Beta shares, Aussie investment grade corporate bonds. Oh, bonds. Ooh, bonds. Geez, I'd probably go for bonds at this point in time. I'd probably, if I had a choice, I'm gonna be maybe not controversial here. Probably wouldn't put it into that. I would probably put my money right now into bonds out of these three things, if this is what this is. And the main reason behind that is I think there's a good chance we're going to see interest rates lower. And if interest rates decrease, bond prices should rise. Bond yields should fall, bond prices should rise. And this share price of this should rise over time. And that's actually what we're seeing now. You can see this short term, and the chart's starting to look interesting. It's starting to break out. And that's sort of a indication that bond yields are starting to drop, bond prices starting to rise. So if I had a choice between these three, and I am not a financial advisor, so this is just me looking at these three at random and just saying I'd probably choose CRED. Definitely not Harvester, Dividend Harvester. I just don't like that sort of vehicle. And savings, no, I can get better returns than that. And I think you could get better returns in that CRED. Okay. Fishball, I really do like your video, and I have watched every single one since 2021. Well, congratulations to you. I do have much respect on your knowledge and thoughts shared. Here is an interesting question for you, which I always wonder, but is always hard to find a definitive answer. How manipulated do you think the stock market is, especially in the Australian stock market exchange? I do hope a detailed answer, maybe even with some examples, if you like. I don't think it's that manipulated. Is that? I don't think it's. I think it's manipulation is way overstated, and I think a lot of times people will blame manipulation. Oh well, the market is manipulated for them making mistakes or share price of a company going the wrong way. I don't think there's much manipulation. I do think there is slight manipulation, and I'm going to try to find a company, and I'm just gonna let's have a look at Zip. What I'm going to do is I'm going to try to find a company where the last trade we saw 1 cent traded. So sometimes you don't see it in Zip. I don't know. CBA it's probably not a big company. See here, you got one share buying at $129.29. So that's an algorithm, and the algorithms will. Here we go. Here's an example. So there's one share traded. The last share traded for CBA during the closing auction was there's one share traded, and a lot of times you will see the price, the indicated price, move up and down. And a lot of times the last share traded, one share is traded. That's the final share, and that final share will move the share price up or down by a small amount. And it has happened to me on a past when I do have a bid in to buy or sell when one share in my bid gets taken out, and you just get so peeved off about that. One share, you might have 3,000 shares buying CBA, and now you have 2,999 shares. It's a little bit annoying. That's the only sort of manipulation I do think there is on the ASX. When it comes to this, what other type of manipulation do you think could be happening? I don't think it's that manipulated overall. I think it's overstated. I do think a lot of people blame. Otherwise, I do think on occasion the financial statements are manipulated, and manipulated legally. They can do that. So I think there is manipulation when it comes to that. But when it comes to the share prices of companies, I don't think there's a lot of manipulation going on. I don't think that's like that at all. That's just my thinking. And I could be completely wrong. Maybe there's way more manipulation. Maybe I'm really naive, that sort of thing. But I just don't think it's there. I think it's used as a blame when things don't go someone's way. My company too affected screenshots of the blue screen. No idea. Shots of the blue screen. No idea. Context. I have no idea. Brad Guyan, thanks, Kneppy. You're welcome. Robert Thal, thanks for covering Metro Mining. Australian benchmark for bauxite has moved from 51 to 59 in the last 8 months. Bauxite is sent to China and used in production of alumina. Yep. And then aluminum. Yep. Aluminium is a somewhat overlooked but important metal for the energy transition, used in EVs, solar panels, and wind turbines. Demand will be strong for many years. Yes, I do agree. My only concern about Metro Mining, have a look at the chart. Share price has pulled back a fair bit. That's the weekly chart, by the way. If you have a look at the daily chart, share price has pulled back. Is this a buy the dip situation? I did think their quarterly report was a little bit weaker. I expected a little bit of a stronger report. Have a look at their pennies 5B. I expected some really good cash flow. Now, I don't follow this company that closely, so I could be way off in this regards. So you have a look at the cash flow here. So receipts were quite nice, 63 million. Now, don't forget, this company has operations north of Weipa, so they do shut down their operations for a few months during the wet season, which makes sense because that area can be quite wet and they can get tropical systems. So they do shut down. That's why the 6 months receipts is quite low. But receipts for this particular quarter, 63 million, but they're only operating cash flow positive, 1.282 million, which seemed really low. And I don't know if the market thought likewise, because the share price has dipped a fair bit since then. Yeah, so what do you think? What are your thoughts, Robert? Do you think the results were a little bit weaker? I don't know. But the share price has pulled back. But again, Metro Mining's performance over time will be dependent on aluminium and bauxite. And as Robert says, the bauxite price has increased over the last 8 months. I'm not even sure if I can find bauxite in here. Bauxite. This is, let's have a look at Forex. No, futures. I don't know. Let's have a look at this. Is this, I don't know, that's a long, this is over a 40-year period. Anyway. Let's move on. LuckyLuke, what should I do? I didn't sell Droneshield and now I'm down. And this actually, from LuckyLuke, may not be feeling very lucky right now. This is, I can't give advice. I cannot give, I thought I responded to this. I cannot give advice. It's up to you what you do with Droneshield. I think, because I'm click on these and yeah, what's your thoughts on AW1, Kneppy? I have a feeling over AW1. What is AW1? No, I've never heard of this company. American West Metals. Now, in saying I never heard of this company, share price on Friday rallied 21%. But if I look at this chart, I have no interest in AW1. And other than that, I don't know anything about this company. I'm assuming the market cap is fairly low. According to ComSec, the markup is 75 million, which is a little bit higher than I thought it was going to be. So let's have a look at what this company does. Now, for some reason, the share price rallied. Copper, another copper plate. Thunder high-grade copper zone extended. They also released a presentation on the 17th of July. So these sort of companies, when I don't know anything about it, I might look at a presentation or two. So Storm Copper Project, I'll be honest with you, I like the names of the projects. Storm Copper, they also mentioned Thunder. Thunder high-grade copper, a Cirrus deposit. I wonder if whoever started this company was like into weather. You have Cirrus, Thunder, Storm. They're all related. Well, yeah, Cirrus, I suppose, is. So I'm assuming they just copper. Yes, Cyclone. They also mentioned Cyclone here. And Lightning. Lightning Ridge Prospects. Great names. I might buy some shares in this company just because of the names. Other than that, I have no idea about this company. It's all about the management, all about their prospects and their projects. Assuming this is an exploring company, let's have a look. Ganza, burning through a fair bit of cash in exploration and valuation. So do they have a lot of cash on hand? That sort of thing. Cash has decreased from 11.8 million to 5 million. They probably have to answer Section 8 because they don't have 2 quarters of funding left, 0.8. And what do they say? Company does not expect to continue at the current level of net operating cash outflows. There you go. So that should not be an issue. Oh, yeah. Civmec came up on the call with a double buy recommendation. Thank you. Yes. Thank you. So Civmec has been in a bit of a move. It's a rally up and came down by the dip situation. I took a position in Civmec just because it moved into a nice support zone and zoomed higher. So it remains to be seen if that position or that trade works out. Okay. T. Bendara, what's your view and expectation on the share price trajectory of AML 3D? No idea. Based on technical analysis and your instinct, how do you find their company financials and announcements as well as trading demand for this stock? With nascent technology stocks as 3D printing and additive manufacturing being hugely in demand in the US market and with great story potential, would you consider the AL3 a short-term or long-term play? So I would still consider AML 3D as a story stock. The main reason behind that AL3 is, let's have a look at the Appendix 4C. They still have fairly limited cash receipts, but I've done a few videos on this company, so there is potential. So receipts to customers 1.6 million for the quarter, 8.3 million for the year. They are on the precipice of becoming operating cash flow and free cash flow positive, so they haven't hit that inflection point just yet. Now, the company has been featured by that Next Investors, which is a little bit of concern for me. So if you do look at the chart, it is quite volatile. And the main reason the share price went on this massive rally was because of Next Investors. Massive volume coming in, volume is starting to decrease, and the share price pulls back. So I could see this going in a few ways, share price pulling back even further. But if the company releases a really good financial results, contract, something like that, maybe the share price would go on a fairly significant rally. I prefer, with these story stocks, I can still consider AML 3D a story stock. It has to prove their business model, has to prove their potential to me just yet. And the way they prove that is by increasing their receipts, which they are doing, becoming operating cash flow and free cash flow positive. That's what I need to see. So a lot of this movement in the share price is based off their story, their potential. But I like to just wait until that point where they realize, showing the market they are realizing that potential. A little bit too much excitement for me, a little bit too much FOMO, that sort of thing for this company, but they definitely have potential. Share price trajectory, yeah, I have, at this point in time, I could see it going either way. It all comes back to the sentiment, and at this point in time, there's a lot of positive sentiment in this company, but that positive sentiment could wane away because this positive sentiment was driven by next investors. And that always makes me a little bit wary when an investing service recommends a company. A lot of times that FOMO from the initial wave of investors dies out fairly quickly. So the main thing with AML 3D is I want to see some proof of concept, proof of their business model. But that's just me. Say something soothing, we are all going to become really rich. What are your thoughts on Australian Vintage, AVG? Current market cap 54.4 million. Last 4 year sales, 250 million. I've liked this too. But yeah, anyway. Last 4 years, 250 million profitable, assets of 296.4 million. I'm buying some. Looks like it's in serious trouble, says Method 341. AVG. Let's have a quick look at the company. Does this company make wine? Yes, I'd say so. I'm probably straight away not a fan. I'm going to have a quick look. Banking facilities executed. Oh, that's not a good sign. Let's have a look. They did a couple raising back in June. I'm going to look at the most recent financial results from the company, the half-year accounts. So Method says in trouble. Let's have a look. Operating revenue, 136 million. A lot of revenue. Underlying EBITDA positive. Net profit, 2.8 million. What's the market cap of this company? Let's have a look. AVG. So the market cap of the company is 48 million. Okay. So that doesn't mean anything because we're looking at the company's market cap, which does not include cash and or debt. That's important and possibly important for this company based off comments here. So market cap 54 million, but assets of 296 million. So let's have a look at the financial statements, and we're going to see a lot of information here that could be relevant. So if they had no debt, interesting. But I have a feeling they're going to have a fair bit of debt. So revenue 136 million, gross profit 39 million, profit 2.7 million. Profit fell a fair bit from last year. So why did it fall a fair bit? Because of other income. Last year they had $16 million of other income. This year, none. So what's that other income? That's important as well. So you can't really look at last year's profit and this year's profit and say the company is not or is not performing. Now let's have a look at the balance sheet. This is the important one. So a lot of current assets, $61 million in trade and other receivables. What's their current liabilities? $54 million. Lots of inventory. $179 million in inventory. It's a lot of inventory. Trade and other payables. Trade and other payables are down to 39 million. So an interesting change in working capital. So trade and other receivables went up 18 million. Inventories went down. And trade and other payables went down 11 million, which is interesting. But, and debt. $77.5 million in borrowings. $66.4 million in lease liabilities. I tend to just ignore lease liabilities for a moment, but they do have a fair bit of debt. So the enterprise value of this company is at least $130 million. So that's the real valuation of this company, $130 million, not the market cap, because they have a lot of borrowings, but do have a fair bit of cash and inventories. Yeah, fair bit of inventories as well. So total equity, 296 million. That's fairly high for a company with a markup of, say, 50 million. And what's the other thing? Enterprise value of 120 million. So a lot of equity, and then a lot of that is inventory. But can they sell that inventory? Now let's have a look at cash flows from operations. So negative. So some of that could be just changes in capital or working capital. All right. Outlook. Let's have a look at their outlook. Actually, fairly positive. Just looking at this outlook, talking about how underlying EBITDA S and net PAT S to improve into financial year 24 from financial year 23. Blah blah blah. The ongoing Red Sea drone attacks and recent DP World disputes have created significant disruption to international shipping channels. Okay. So there is a fair bit I don't know about this company. So it looks like they are wine. Is that the main thing? The balance sheet is strong with gearing net debt to equity. Yeah, that's true. So they have a fair bit of equity, but not as much debt. 23%, leverage 19%, net tangible assets per share of 92 cents. So current share price is 14 cents. So underlying return on capital employed, 3.1%. So there's a lot of things intriguing about this company. So why is the valuation of this company seemingly so low? And then get the chart. Coming really something on the 30th of June, and the share price just absolutely collapsed. So if I had a look at these particular financial results back in February, I would be like, oh, interesting company. And I could have bought shares at 34 cents. Now the share price is 14.5 cents. What happened on the 13th of June? Let's go back. Oh, they did a capital raising. So why did they do a capital raising? That's the other question I have. Trading update on the 11th of June. So it sounded positive in the half-year results, but maybe it's turned negative. Okay, so maybe there's a bit of negativity in here. Oh, net debt as at 30th of June was expected to be in the range of 70 to 75 million higher than the 43 to 50 million previously expected. That's a bit of a concern. Straight there, significantly higher debt. And now because maybe of that debt, they are doing a capital raising, $20 million capital raising to further improve liquidity, reduce leverage, and increase balance sheet strength. So this is a sort of company what I have to delve into a little bit more. On the surface, it does look intriguing, the valuation, particularly that inventory. They have a lot of inventory, but the market doesn't like this company at all. And the reason I know the market doesn't like it is because look at the chart. The chart is ugly. So in this case, I'm going to judge the chart. And maybe what I'll do, I've never had a look at this company in the past. I'm just going to put this onto one of my watch lists just to follow how the company is performing because the chart looks horrific. So maybe method 341 is right. Maybe it is in serious trouble. But geez, yeah, I just don't know. I need to look at it a little bit more. Stephen Harrison says, I'm wondering with what happened with CrowdStrike outage, what, if any, effect this will have on data center and or cloud storage type stocks in general. Well, I don't know if it'll do anything, to be honest. I think it could be a very minimal effect, but I don't know. I'd say minimal effect, but I could be completely wrong. Before end. Context. Don't know. Christian Pommering. Contexts. We have a problem. Context. Gemnock, it's great to keep getting these videos updates. You're welcome. That's the plan. So YouTube says I should answer with that's the plan. Ruben says, Terry Smith once said, we look for companies that consistently earn a high return on capital employed because this usually indicates that they have some form of competitive advantage, which will enable them to continue to do so in the future. The fact that JB Hi-Fi has more than 30% in return on capital employed will help grow the company's earnings as well as the share price. Won't be surprised to see JB Hi-Fi reach $100. Return on capital employed. I do look at that on occasion, and also like return on equity, return on invested capital. Does JB Hi-Fi have a competitive advantage? Probably their competitive advantage is they are sleek in their operations. What I mean sleek is if you go into a store, the stores look, I wouldn't say cheap, but they don't spend much money in their store layouts. That's something like that. They're very efficient, effective in how they lay out their stores. I'm going to have a look at JB Hi-Fi. And the three, like the returns here, so we have 5 here. They have return on asset, return on tangible assets, return on equity, return on capital employed, return on invested capital. A lot of these are fairly similar. You can see return on equity and return on capital employed are fairly similar for JB Hi-Fi, and they're fairly high. So return on equity of 33.8 is really high for this type of company. And this is 5-year averages. Return on invested capital, I do sort of prefer that over return on equity. That's a little bit lower, but still high, really high at 19.6. And that's an indication of a high quality company. And I do think JB Hi-Fi is a high quality company. The only thing I have is valuation and potential short tail or headwinds in the next year or so. Potential, but still high quality company. Yeah, I haven't done much work on return on capital employed. It's mostly return on equity, return on invested capital, but return on capital employed, yeah. But it's in the same sort of ballpark as those other twos. Alejandro Zarate, as always, spot on video, mate. Thanks heaps. You're welcome. I should do a few more questions. We're getting to July, still like 10 days or 20 days behind. Nathaniel Gray, this is amazing. I actually did a deep dive on Alconsil based on my comment. Great insights. I learned a lot. You're welcome, Nathaniel. And 9 slide glide. 3 large miners hit 52-week lows today. BHP, Pilbara, and Luca as commodity prices trend lower. Meanwhile, today, 4 mining services companies hit 52 weeks high. ALQ, which is ALS, LYL, which is Lycopodium, CVL, which is Civmec, and Visan. There's sure to be lessons there for us investors about where to look for businesses that have control over their earnings. I'm pretty sure that's a pretty good comment. In fact, I'm pretty sure BHP's gone down even lower. I had a look at BHP yesterday and I was like, ooh, BHP, just based off the valuation, is starting to look interesting. It hit $40 the other day. The other two, was it Iluka? So Iluka, so BHP's iron ore. Iluka, I'm pretty sure, is mineral sands and maybe a bit of rare earths. And chart looks horrendous, by the way. I did buy at 821 and I sold out right after I bought. Thought this was a breakout, and about 2 weeks later I sold. So I can get rid of that now. Actually, I'm going to leave it in because that's a reminder that even though I sold at a loss, it was a good decision because the share price is significantly lower. And what was the other one? PLS, Pilbara Minerals. Yeah, lithium. Lithium down. Maybe found a base. And those other 4 mining services companies are all up. Although they all do different things. And is Visan a mining services company? Would you classify Visan as mining services? I think, yeah, you probably could. Let's see what they say. Let's see if they do say, or they call themselves mining services. Actually, let's go to their website. Visan, or they call themselves a vertically integrated water services company or provider. But they do have, or they do help provide services to mining companies. So in a way, they're a mining services company, but in a way, they're a little bit different. Yeah, this sort of company, I think, Visan, even if there's a significant mining downturn, won't be significantly affected. But a lot of other mining services companies will be significantly affected if there is a major commodity down cycle. So thank you, 9 Slide Glide. Damatrix. Just wondering what podcasts you listen to or other media books you consume, stock related or not. I used to read biographies, but I look for the alternative views these days. I did a video on podcasts, and I did a section on books, and I've already mentioned the podcast. So podcasts and books are mostly what I listen to or read. Don't really watch TV shows or read news stuff. Don't really read biographies either. So I'll put a link. If I remember, I'll put a link of podcasts and books if I can find where I did talk about those recently. I'm surprised you didn't mention Telix in today's video. Okay, let's have a look. What date was that? That was the 24th of July. Did the share price of Telix fall that day? Let's have a look. Share price fell 7%. Yes, on fairly big volume. I can't remember what happened that day, 24th of July. Oh, they did a convertible bonds. Yeah, convertible bonds. I'm not interested in convertible bonds, that sort of thing. FDA also accepted Telix NDA for new prostate cancer imaging agents. And if you do have a look at the chart, even though the share price dropped 7%, it wasn't. Yeah, it wasn't. When was it? It was somewhere in here. It's right there. It's a small blip, just a small blip that day. In fact, the share price has fallen a little bit from there, but it's just a small blip in the broader uptrend of TLX. So there you go. I've mentioned TLX, but yeah, the share price movement on that day for TLX wasn't the reason behind the drop wasn't something that would trigger me to have a further look at the company. It's not a catalyst. Forest Hill, thanks Kneppy, good objective analysis. I also have a bit of a personal connection with Pullback, first bank account, 2 mortgages, Comsec, but I've never owned its stock. Banks and resource companies just don't attract me for my goals. And I completely acknowledge and understand why. I will trade banks and resource companies, but for the longer term, I don't see much growth or any significant growth in either. And resource companies are price takers. They don't really control their own destiny, to be honest. You can have great management, and even if a company or mining company has great management, if the underlying commodity drops like a rock, share price of the company will drop like a rock. I do prefer companies that control their destiny, and I don't think mining companies have that. And banks, the growth is over. There's going to be very little growth for banks over the next 5, 10, 20 years. What went wrong with TLX? Yeah, I have a feeling it was just that bond. That's the only solution or suggestion I have, but it was just a little bit of a dip. That's all I can think of right now. Clarity still going up though, even though it's a story stock. Worth hopping on these trains. One would think. Chris and Caroline. I do have a small position in Clarity. It's still in an uptrend. Still a fair bit of volatility with this company. So it fell, was it 12.9% on the Monday, and then it rose 7% on the next day, and is almost back up to where it started. So a lot of volatility in this company. And the reason, talking about TLX, the reason I took a position in Clarity is I'm hedging my position with TLX because Clarity has the potential to disrupt TLX in the future. Just has that potential. So if it does realize that potential, at least I have some shares in Clarity. So it's sort of like a strategic position in Clarity because they have the chance to be in competition with TLX because they use a different element. I think it's copper they use. Is it copper? While TLX use radon, something like that. And copper seems to be better at what they're doing. Okay, and I think this will be the last one because, yes, Shelley Dugmore, great effort with the chapters. Kneppy, please keep the faith in lithium prices improving for all us Pilbara shareholders. Lithium stocks have been struggling, no light at the end of the tunnel for a long time, I reckon. Yep, lithium prices could be at these levels for many years, just don't know. So the way I am playing lithium is all I want to do is wait, be patient and wait, because as I mentioned earlier in this video, sometimes I'm way too early to the shift in trend or the thematic. So in this case, I just want to wait until I see proof that lithium is starting to turn around, and Pilbara probably is one of the companies you want to be in first. Okay, that's all I have for today's video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for the video. Have a good day. Bye.